Hi everybody, nice to see you all, nice to have you all here on this session then, Mastering Year End, and that really today is all about the AGAR. What is the AGAR? What does it involve? How do we complete it? What do we do once we've completed it? Worth just mentioning that this is not a Scribe specific session, so if you're a Scribe customer, you're very welcome to listen in, but it doesn't take you through how to do the year end on Scribe itself. There is a separate session that you can sign up for called Mastering Year End on Scribe, so do have a look at that one if that's the specifics that you were looking for today. This is all about the AGAR itself in sort of general terms. Okay, so then as we said, what is the AGAR? I thought that was the best place to start, particularly because I've seen some chat bits pop up of people saying I'm completely new, don't even know what it is, so helpful if we can start right at the beginning. So the AGAR is the Annual Governance and Accountability Return for the period the 1st of April to the 31st of March. So obviously this is why we're all here. The 31st of March is rapidly motoring towards us now. So if you have sort of no sort of prior knowledge of this at all, then I definitely recommend that you have a look on your council website, because your AGAR should be published there. So you can go and have a look at what's been completed previously, sort of as a starting point to see where, you know, what's happened previously. The sections that make up the AGAR are the certificate of exemption, if relevant, and we'll talk about all these sections in a lot more detail as we go through the session. The internal audit report, section 1, the annual governance statement, and section 2, the accounting statement. So the accounting statements is the numbers bit, and that's what we're going to spend, you know, a reasonable amount of time on in this session, because that's sort of quite a big element of it, getting all the year's accounts collated and the right numbers in the right boxes. There's also different AGAR forms depending on the criteria that your council meets. And as Lucy mentioned, there's lots and lots of information that will come from your external auditor. So do have a look at it. They have some useful documentation about working all this out. And again, I'll give you some more pointers as we go through. So Form 1, probably not relevant to any of you, but no financial transactions, and therefore it'd be the certificate of exemption. Form 2 is if you meet the criteria to certify yourself exempt, and that's being under 25k of both gross income and gross expenditure for the financial year. You do have to meet some other qualifying criteria that is detailed on the certificate of exemption, and it's worth mentioning at this point, the certificate of exemption is exempting you from sending the AGAR to the external auditor. It is not exempting you from completing it. So regardless of that, we need to complete the AGAR. Whether or not you send it to the external auditor will relate to whether you can complete the certificate of exemption. And then Form 3 is if you're over 25k, under 6.5 million, which I'm sure that you all are, or if you are unable or do not wish to certify as exempt. So it's possible that if you meet the criteria, but actually your council said, actually, we would like to send the AGAR off and have it formally reviewed and signed off by the external auditor, you can still choose to do so. Obviously, there's an external audit fee to pay for that process. A couple of things then also that's useful just to clarify at this point, particularly if this is all new to you. So I've already mentioned the internal audit and the external audit. So again, just to clarify the differences, the internal auditor, so they will be engaged by the council to review the council's procedures and controls. So that's something that you will need, as a council, will need to arrange to have somebody independent to the council with knowledge of council procedures, accounts, etc., to come and review the council in order that they can then produce the internal audit report, which is part of the AGAR. As we said, you will need them to come in and do that so you can complete that section. And all councils should have an internal audit at least annually. You may have one more regularly if maybe you're larger or the scope of the council determines that might be necessary. And then the external auditor does not need to be appointed by the council. It's determined by the county the council is located in, and they will review the AGAR. So you will send the AGAR to your external auditor or the certificate of exemption, not both, okay, based on whether we meet that criteria or not. So just be really clear about that as well. And as we talked about before, all the documentation will come from the external auditor. There is lots and lots of useful information to have a look at there as well, that I would suggest if you haven't done one before, you're reading that, or if you have, even read that between now and the end of March, so you're really clear on what actually needs to be completed. Another question that comes up quite regularly, and is also something that we need to just consider and be mindful of, is when we're completing the accounting statements, whether we are using the accounting approach receipts and payments or income and expenditure. So the numbers in the boxes are determined by the accounting approach that we're using. So just to reiterate this, receipts and payments, simple form of accounting, sort of cash basis level of really what happened, when it happened, regardless of when it relates to. So thinking about recording the transactions simply as they take place. Income and expenditure is a little bit more in line with sort of business accounting, what you might move more au fait with if you've come from a sort of more commercial background in terms of thinking about the timings. There'll be year-end adjustments, creditors, debtors, accruals, things like that to consider as well. Now, if you're under 200,000, that's gross income and gross expenditure for the financial year, then you can work in receipts and payments. If you go over the 200k threshold for 3 consecutive years, it's important to note, you would need to work in income and expenditure. So it might be a scenario that maybe you go over 1 year because you've had a large grant come in or some SIL money, for example. But if you've not remained at that over that level for 3 consecutive years, you wouldn't need to move to income and expenditure. Having said all that, you can be a smaller council and you can opt to report using income and expenditure as your accounting approach. That again can often be if you've come, or the councillors or the council has got a strong financial background, may opt to use that option. So again, it's important to be aware of which accounting approach you are using to complete the accounting statements. Now, if I've said all that and you're thinking I haven't got a clue what that means, have a look at last year's AGAR, look at your accounting statements. If box 7 and box 8 are the same figure, then you're almost certainly working in receipts and payments. If they're different, then you're definitely working in income and expenditure. Obviously, hopefully the size will give you a bit of a feel for what you're likely to be, but you can have a look and review what was done previously to get some more details about that specific to your council. Also important to note at this point as well, that if you find yourself moving between approaches, so for example, if you have gone over the threshold for 3 consecutive years, you now need to work in income and expenditure, you will need to restate the prior year as well. So when we look at the accounting statements, we'll have the current year on the right-hand column, the prior year as the left-hand column, and both columns need to have the same accounting approach applied when filling the numbers in the boxes. So if we're moving between them, we'd need to restate last year to bring it in line with the current year that we're working with. So that's another consideration of things that we can prepare for if we know we need to do so. And then that takes us in nicely then to preparing for year end. So we've got a bit of a feel for what we're going to be doing and what we can now do then between now and the end of March to get ourselves as ready as possible. So the first thing, which we kind of alluded to initially, is that obviously there's going to be some additional work involved. You know, the AGAR is going to take some time to get completed, particularly the accounting statements, the collation of the accounts. So expect it, factor it in where possible. As we talked about, diarise those things, block out time available to you to do that. Hopefully you'll already have a meeting scheduled for when the AGAR is going to be reviewed, approved, signed off. So you're going to be working back really from there. So you've got from then to work back, and from now to the end of March, you've also got the opportunity to really review what's going on. So if you're behind, you need to do some work, you need to review, factor it into your diary so you've got some specific time allotted to attend to it. Obviously important to have a good cash book. Obviously you need that information, your accounts information, to be able to complete it all at the end of the year. So it still sounds obvious, but again, often you'll have so many different roles, so many hats on, that there's not often time to do all these things. But it's really about making sure you're up to date, data in, accurately recorded in the cash book, monthly bank recs as well, making sure that everything's as it should be. If you've got reconciling bank position, then that's part of your checks to make sure things are going into the cash book correctly. You know, if you're carrying a bank rec that's had a difference for the last 3 months, or you haven't done one for a while, you know, this is the time to get that back in line. Also thinking about VAT as well. So if you're VAT registered, it's likely that your VAT return, your quarter 4, will end on the 31st of March. And if you're just claiming it back via Form 126, again, I would recommend that you do a claim to the 31st of March to tie it in with the year end. So this then gives you an opportunity at the moment to collate that data. You know, have you got all the VAT paperwork, the invoices showing the VAT information, the VAT number? Have you got that information in your cash book ready to be able to create that claim without a lot of extra work once you get to that point? So think about things we can do in preparation. Little extract just from Scribe here, just showing a reconciling bank position. So ideally by the end of the year, we'll have 12 months worth of them to show everything is up to date as it should be. And also just a little extract from our Form 126. So again, just checking that we've got all our information, all our VAT numbers saved in there as well. So it's ready to go when we get to that point. Also, as we talked about, all the documentation that you've got available to you to access now as well. So there's what's called a decision tree that is available you have a look at that now on the external auditor website. I use PKF as an example because PKF tends to be the one that will cover most councils in the country. Just going to mute. There we go. Yeah, so decision tree is really useful. So if you've got any uncertainty about which AGAR form and what information you're going to need to provide, have a look at it, because it's basically yes, no answers to different things. It will take you through and say, you need to complete this and all these documents. So you're very clear then, what do we actually need to make sure we're doing? Have a look at the AGAR itself, the form itself, because there are guidance notes. There's a completion checklist as well. So you can read all of that. Make sure you tick off those things in the checklist as well. So you're very clear what you need to do. Have a look at the practitioner's guide. So the JPAG practitioner's guide. JPAG are becoming SAP. So smaller authorities, proper practices panel, bit of a mouthful. But the practitioner's guide is basically supporting of the preparation of the AGAR. So if there's any questions that you have surrounding what needs to go into the different sections or how it's completed, the JPAG practitioner's guide is very, very useful to do. Make sure that you've got a copy of that and you refer to that as well. And as I mentioned, when we were thinking about moving between receipts and payments and income and expenditure, or vice versa, and the requirement to restate, there are other reasons why you might need to restate last year as well. So if you've got any scenarios, such as the external auditor may have found something that was incorrectly done and ask you to amend the box values for last year. You may, if you are new, often we find that people come into the council and then realise that something's been done incorrectly. You know, a small bank account's been omitted from the total, something like that has happened. So if there's anything that has caused an issue with last year, excuse me, and you realise that it needs to be restated, then obviously that's something that you can do now, between now and the end of March, so that last year is ready to go. Last year's closing position becomes your box one of this year. So you want to be ready to go with the starting point when we get there. So it's important just to take that opportunity now, if necessary, to review anything that needs to be resolved for last year as well. Okay, so we've thought about what the AGAR is, how we can get prepared as best as possible, and then we can now think about completing the AGAR itself. So obviously this is going to be a point where beyond the 31st of March, all our data is in our cash book. So all our transactions are logged, recorded, our bank is reconciled to the 31st of March, obviously making sure all transactions are included. Everything is where we want to be, and we're now ready to start thinking about what that means for the AGAR itself. So as we mentioned, we've got a certificate of exemption. And as we mentioned as well, we still need to complete the AGAR, but if you meet the criteria, then you have the option then to just send the certificate of exemption to the external auditor. So this is just an extract from last year's AGAR. The current year's AGAR forms aren't available at the moment, so my extracts are last year's version, so you have to forgive me for that. But you can see there all the details that it gives you. You can obviously check all this to make sure that you meet this criteria if you wish to sign this off. And obviously, as we keep saying, this is the only thing that you would then send to the external auditor. Then we've got the internal audit report. So as we talked about, you will need your internal auditor to come in, review, write the report, so the summarised conclusions from the internal audit report to then complete this section. So at the very least, your internal auditor needs to come in and review to a level to allow yes, no answers to these internal control objectives. So you can see all of the things that they will be checking as part of this process around things that have been done correctly, followed procedures, recorded appropriately. So the adequacy and effectiveness of the council's procedures and internal controls, so things like the way the precept was calculated, maintaining the asset register, and as we said, at least annually. And then the report will then feature in this boxes here, yes, no responses to these objectives. Then we can move on to section 1, the annual governance statement. And that's quite closely related to what we've just looked at in terms of the internal audit report. So these, again, are yes, no assertions about the controls in place, but this is something that the council will need to complete. So previously, the internal auditor had come in to review these items. Now the council, as part of the process, needs to go through these yes, no responses to each of these. Hopefully, if you've got things in place as they should be, it's going to be yes responses to things being done as they should be. To say yes, obviously I need appropriate evidence to support a yes answer, not that you have to send it off, but you just need to be very clear that you're able to respond in that manner. If it's no, then you've obviously got potentially some issues and you need to provide some further information as to how those will then be addressed and looked at going forward to resolve them. As I said, it's quite closely related to the internal audit report, because actually the number 6 there is an adequate and effective system of internal audit. So actually having someone coming in to do the internal auditor coming in to review allows you then to say yes, because that's part of this process as well. So quite closely related, and a sort of review of things, how things have been done in the council over the last year, and hopefully effectively done, so that you can then answer yes to these elements of these assertions here. So then that takes us to section 2, the accounting statement. So this, as I said, is the numbers bit. This is the sort of the main part of it, really. So what we've done so far is kind of reviewed how the council does things, procedures, etc. so far. This part is the numbers bit. We need to collate all the information, all the transactions that have gone through the financial year to give us our cash book figures. Obviously, we said we need to get to a balancing bank reconciliation at the 31st of March before you can then come and do this. And then it's putting the numbers in the right boxes appropriately. And from there, just want to take you through some things to consider about each of the boxes as we're filling them in. Before we do that, though, we just need to reconsider what we were talking about earlier in terms of our approach to completing these boxes, whether we're working in receipts and payments or income and expenditure. So if we're working in receipts and payments, it's, as we said, cash basis, what happened, when it happened, regardless of when it relates to. So we're just working with gross totals directly from the cash book. So it just ins and outs, what's happened to get to our final end figure being equal to the closing bank position, because we just recorded what's in and out. So we would directly have our cash book, take the gross figures from there, VAT is included. When we're working in income and expenditure, we're thinking about timings, adjustments, consideration of bringing it into line with what actually relates to the financial year itself. So VAT needs to be excluded from the figures that we're working with, and there will therefore constitute either a debtor or a creditor, depending on whether VAT's owed to you or you owe it to HMRC. You'll also be thinking about other adjustments, so creditors, debtors example. So have you had goods or services provided up until the end of March that you won't be paying for until April or beyond? If so, that would constitute a creditor. Equally, if you've provided goods or services to a customer up until the end of March and they've not yet paid you by that point, they would then become a debtor. Other considerations around accruals, prepayments, receipts in advance, so lots of different things, but it's really thinking about the timings of the transactions that relate to the financial year. Where should they actually sit based on when they actually relate to? So it's important to think about those things. When doing so, a couple of things to consider. So materiality and regularity. So firstly, the total that you're working with. So do you want to set a level of amount that you're then going to consider adjustments for? You know, do you really want to put a creditor in because you bought some stationery that you've not paid for that was £5 or something, you might want to set a level so that you're very clear on what you're reviewing, what you're dealing with. Also think about regular payments. So if you have a grounds contractor, for example, that you pay in arrears each month, if you end a financial year with 12 months worth of payments in, then I wouldn't worry if the timing's out, month out, because you've still got 12 months worth of cost within the period. It would only be, for example, if in March they went over and above what they would normally do, there was a significant additional cost that you might want to therefore show because that was over and above what they normally do. So give some consideration to that, to not sort of make things unnecessarily hard for yourself if a lot of what you do actually just repeats on a monthly basis. Obviously important to also make sure that last year's adjustments are reversed. So if you have software, that should do that for you. But if you're using a spreadsheet, just make sure your calculations are taking account of what happened last year to reverse, and then add in what you're adding in for this year as well. So some work to do if you're working in expenditure. Little example there, just again from Scribe, just some adjustments that might be relevant. So as we talked about creditors, things that we owe that we've had the goods or services for that we've not yet paid for. Prepayments is the opposite to that. So we might have paid for something, but we haven't yet had the benefit. So in this example, we've paid for some building works. Whatever reason, it's not going to happen in this financial year. We therefore want to shift the cost of when we've paid for it this year into when it's actually going to take place next year. Debtors, we talked about. Customers owe us for services we've provided. Again, the opposite to that, receipts in advance, where we've had money in, but actually they haven't had the service yet. So the example there, we're hiring out our town hall for a wedding. They've paid for it, but actually the wedding takes place in next financial year. So we want to shift that income to show when it's relevant to. So these are all the things that you will be considering if you're working in income and expenditure. If you're working in receipts and payments, you do not need to worry about any of this. You're just recording what was paid and what was received when it actually happened, regardless of when it relates to. So as we talked about then, if we just quickly pop back to here, just to remind ourselves that we're thinking about the accounting statements and just completing them, just some little sort of things to consider when we're thinking about completing each of these boxes. So I talk about boxes because that's how they used to be referred to. I think often they're now lines, so I'll use line, box interchangeably, but that's what we're talking about completing. So line 1, box 1, balances brought forward, sounds really obvious, but should be equal to box 7 of last year. So your box 7 of a financial year becomes box 1 of the next financial year. Nice and straightforward, generally. Obviously, if you're restating anything, if anything's been updated, changed for last year, obviously if that means box 7 has changed, obviously you need a new starting position in box 1. So make sure that you're showing that appropriately, and when you're filling in all the numbers in the boxes, that yes, it follows from box 7 to box 1. Line 2 is precept or rates or levies. So that's just the precept. Rates levies refers to the internal drainage boards who also use this form. So it's just the precept. Sometimes people think, does it mean SIL because that's a levy? No, it doesn't. It's just the precept. Also, be really careful as well, is if your district council paid you over the precept with something else, make sure you don't include that in box 2 because you've seen the lump sum of the money come in and go, oh, that's the precept amount. If they've paid you a grant or some other money alongside that, make sure you're just showing the precept element in line 2. Line 3, total other receipts. So any other income that you've had that isn't the precept. No bank transfers, obviously. If you're moving money between your different bank accounts, that's just internal transfers of money. So you don't want to inflate your figures. So anything where you've done that, so ins and outs, exclude that on both sides. Remember that when we're working in income and expenditure, no VAT. So any receipts that you have, VAT is not included, and that's any VAT reclaim money that you've had back from HMRC. If you're VAT registered, that's any money that you've charged to customers in terms of VAT is excluded. So it's just the net amounts in receipts and payments. It's the gross totals. Also be mindful of the way in which you deal with credit notes. So if you have had, for example, you made an overpayment to a supplier and they gave you the money back, that is not a receipt. Despite the fact that you've received it, it is a correction to payments. So if it has the same originator, i.e. you paid a supplier, sorry, and they refunded you, that is a correction. So it doesn't want to overinflate your figures, and the practitioner's guide is not particularly clear on that, and that does catch people out. So be mindful of how that works as well when you're thinking about those numbers in those boxes. Line 4 is your staff cost. So again, have a look at the guidance. The practitioner's guide will list exactly what's included. It is your core salary cost. So then it's your salary, your pension, your tax, your NI. It is not training. It is not payroll admin if you haven't outsourced it and they do that the work for you. It is not if you have agency staff or a locum staff, that if they're not directly employed, they do not go into line 4. So make sure that, again, you're clear about what goes in there. Line 5, loan interest or capital repayment. So that obviously is if you have a loan and you're making repayments against that loan, that needs to go into line 5 as a separate amount. And then line 6, all other payments. So everything else that you're paying out basically that isn't staff cost and isn't a loan repayment. So the same things are true that I mentioned when we talked about other receipts. So no bank transfers, movements of money, and no VAT if you're working in I&E. And again, if you are refunding a customer and you've paid them some money because they've overpaid you or they cancelled the service you were providing, remember that's a reversal of receipt entry. It's not a payment, despite the fact that on the bank statement it's a payment back out. It's actually a correction of income that you'd had before. So be mindful of that again. Line 7. Balances carried forward, as we talked about. So this is our total that then becomes box 1 for next year. So we need to make sure that therefore that it actually adds up. And I have seen quite a few AGARs that actually don't, accounting statements in AGARs that actually don't sum. You know, it confuses you for a while because you can put the numbers in the boxes, it gives you an error when we put them into Scribe, and then we realise that's simply actually because the numbers that have been submitted don't actually add up. So obviously check that. So that's box 1, 2 and 3, the opening position, plus precepts, plus other income, less 4, 5 and 6, your staff cost, your loan repayments, your any other payments as well, to come back to box 7. Then we've got line 8, that's our total value of cash and short-term investments. So this is our balancing figure to the bank reconciliation. So as I mentioned, in order to start this process, we need to have a balancing bank rec as at the 31st of March, and the total of all your bank accounts at that point is going to be your box 8 figure. Remember to take account of any unpresented items, and this is also something that catches a lot of people out. So unpresented items are things that the council have paid or received, so generally that would be cheques, but that haven't hit the bank statement. So now things tend to be more instantaneous with online back payments, etc. There's not so much of a lag between actually making a payment and seeing it on the bank statement. But an unpresented item is something that was actually paid or received by the 31st of March, but isn't on the bank statement. It is not something that should have been paid or received. So that's the difference between unpresented items and end of year adjustments. So end of year adjustments are only relevant if you work in an income expenditure. If you work in receipts and payments or I&E, you can both have unpresented items, because it might be that you've made a payment but it hasn't hit the bank, and as I said, particularly if it's check related. So be really clear about that as well. And as we said as well, if you are working in receipts and payments, line 7 and line 8 will be the same figure, because the ins and outs for the financial year will come back to the bank figure. So what you've got in line 7 is your total funds carried forward, will also be the total of your bank, because those things just in and out gross totals we talked about for receipts and payments. If we're working in income and expenditure, line 7 and line 8 will be different due to the value of your VAT figure that's owed to you or by you, and also any other adjustments. So as we said, debtors, creditors, prepayments, accruals, receipts in advance, etc. And you will need to list them. So as part of the information you send to the external auditor, you will need to provide the details of the difference between box 7 and box 8. So that will be related to what you've actually adjusted in the boxes above as well. Moving on then, line 9 is our fixed assets and long-term investments. So obviously that's a register of what you've got in terms of your total asset figure, and long-term investments. So not short-term investments, obviously, because they go into box 8. So these are longer term sort of bonds, etc. Obviously, just making sure that your asset register is up to date for any new assets and any disposals for this financial year. Again, it's important to make sure that we're consistent with the reporting of the total. Now, most councils just use the original purchase value. Whatever the asset was originally purchased for goes into as total as box 9. The practitioner's guide doesn't actually specify the method to use, just that you need to be consistent and restate if you obviously change your valuation method. So if you move to the current value, you'd obviously need to report on that and make sure the prior year was the same as well. And again, anyone coming from a business background with no depreciation, completely forget that. If we buy an asset, it's simply a payment into box 6. It goes onto the asset register. It stays on that asset register until we get rid of it. If we dispose of it, it's gone. If we sell it for money, then we can put it into box 3 as a receipt and take it off the asset register. There is no depreciation. And then line 10 are borrowing. So that's our loans, figures, amount owed at year end, generally PWLB, and that needs to match up to the list of the outstanding loan at the end of the year as well. So I mentioned a few of these as well. So other documents that you'll submit alongside the AGAR is the bank reconciliation. So that's as at the 31st of March to agree to line 8, as we talked about. The reconciliation between line 7 and 8 for those of you working in income and expenditure. So your summary of debtors and creditors, any other adjustments, etc. That then explains the values that gets you from box 7 to box 8. And you will also need to review whether you need to explain any variances. So this is based on the current year compared to the prior year, and variances over 15% for lines 2, 3, 4, 5, 6, 9 and 10, or if box 7 is more than twice line 2. Now, do check the specifics of your external auditor, because we have found in recent years actually what the different external auditors ask for in terms of the variances all vary slightly. So what PKF are asking for.
Are you on to my bit?
Yes.
I'll make sure.
Mute that one. What PKF asks for in terms of expenditure variance is slightly different to Moore's and Mazars, for example. So do be really clear that you check the specific requirements to make sure whether you need to explain them. You can put your numbers into a spreadsheet form that they'll provide, and it will then give you the variance in whether you need to explain it. But remember, when you do that, full numerical explanations, actually explain it. They want you to know that you understand the explanations. Don't, income's gone up because we hired out the hall more. You need to be specific, give examples, and understand the breakdown of the values that make up that variance. Okay, so once we've got to a point of all of that, it's worth just mentioning as well, these documents have to go alongside if relevant. You may have other documentation as well. So if you've had any issues with restating, you might want to explain. If you had to say no to some of the annual governance assertions, again, so anything other that's relevant would go alongside that. So now we can think about the signing of the documents and the publication requirements. I'm not going to spend too long on this because it's sort of more of a list of the things that you need to do. And again, you can review on the slides or refer to the specific auditor documentation that will take you through this. But basically, once the accounting statements are completed, the RFO will sign them off. Then you'll have your meeting of the council, as we talked about, that hopefully you've got scheduled in, where you will receive and note the internal audit report, will complete and approve the annual governance statement, approve the accounting statement, and then if the certificate of exemption is relevant, approve that as well, and then sign it all off. Once you've got to that point, the RFO can then set the commencement date for the exercise of public rights. So this is that the accounting records must be made available to view by any interested person. So you have to provide them available for a specific time period, but the AGAR must be approved and published before that inspection period starts. And again, that's something I've seen quite a lot of councils get pulled up on in the external audit report, that didn't happen. There was an issue with the sort of the dates and the ranges that's being used here. So again, be clear on this. And again, when you get the documentation from the external auditor, they will give you the form relating to this, and they will also suggest the range that the time period that you might want to use. But if not, you can tweak it, but you must include the first 10 working days of July. I think the 1st of July this year is on a Tuesday, so you'd have to make sure you factor that in if you want to change that around as well. So make sure you adhere to that, because that is something that you will get pulled up on if you do not stick to that. Okay, so as we keep talking about then, if you are completing the certificate exemption, that is signed off and sent to the external auditor only. If you're not exempt, then you will send off the AGAR, and any other documents that we talked about just now will go to the external auditor with that as well, so they can then review. If you're exempt, you can go ahead and publish all the information on your website. So that's basically the AGAR, any supporting documentation, your public rights, and then your external auditor's details. So as I said, this is all here if you want to come back and review this at a later date. If you're not exempt, then obviously you can publish some of it, but you're still going to be waiting for the external auditor report to come back. So you can initially publish your AGAR, but the details, the declaration that the accounts are as yet unaudited, and obviously that will be there until which time you receive that external audit report back from your external auditor, and then you can update it with the notice of the conclusion of audit, the full AGAR with the external auditor's report and certificate as well. So just update that as once that comes back in, and that tends to be around September, October time, depending on how well they're doing. But we found last year that they were quite pushed for time, and some people were quite delayed in getting that back. Finishing off then, conscious I've said lots and lots of things today, and all that we've talked about so far is all focused on obviously the completion of the AGAR, the 24-25 financial year, getting that all done, dusted and completed as we want it to. But obviously we also need to think about the new financial year as well. So the 31st of March obviously marks the end of this current financial year, and we'll all be furiously trying to get the AGAR completed. But obviously the 1st of April is the new financial year. So we're going to almost certainly be needing to work the new financial year alongside the completion of the AGAR. So again, you've got an opportunity now to think ahead, set up your cashbook ready for your new financial year. So if that's a spreadsheet or a piece of software, can you get the year ready so you're ready to start? The budget figures are there available to you, so that 1st of April you've not got to think about that as well. Now might be a good time as well to objectively review your accounts records, your cashbook setup. Does it work for you? We hear so many people who've come new into clerking and all they got was a laptop. Some lady not long ago told me she just got a carrier bag of paperwork, and she was just expected to start from that point without any really knowing what was going on. So the training, is available to you. Does it actually do what you want it to do? Was the software or the spreadsheet set up number of years ago, and actually the scope of the council's changed? It now doesn't work how you want it to. Can the councillors access it if you want to? Is it easy to share the information, etc., etc.? Is it saved appropriately? Can you access it from different devices? All of those things to consider, and particularly at this point, and often the mind is focused when you're completing the AGAR as to whether it's doing all the things you want it to. How could you improve it? Is it time to change something to make it work better for you? So just thinking a little bit more details about structuring your cash book. So obviously it sounds really obvious, but I've seen so many where that hasn't actually happened, but you want to base it on your council budget and your preset breakdown. So you can actually say you're allocating the payments and receipts out to your budget code, so you can have a look and say, what have we spent against this budget line? Where are we overspent? What are the variances? And that sounds really obvious, but actually often that doesn't happen. Also think about grouping codes together so that you can actually, somebody said, how much is it costing us to run the village hall? You can run a report very easily, shows the income versus the cost, and all that information's there. How could you improve it? Is it not detailed enough? Is it sort of very broad level? Could you go down a bit more information to break it down a little bit more? Is it too detailed? Has every code that you could ever think of, budget line, been set up under the sun, and it's this great long list of information that doesn't actually really relevant anymore? Could you summarize it a little bit? Has it got all the information that you need in there? So have you got VAT numbers for your suppliers? Have you got invoice numbers in there? Have you got as much information as possible to make it easier? And these are all the things that as you go through this AGAR process, if you think actually that was really hard to calculate my staff cost or do my VAT form 126, how could I improve it so that next year it's a little bit easier?